We're going into a professional marketplace here, where you've got up against institutions, you're up against professional traders, career traders who have got billions of pounds worth of technology behind. That's not to put people off and to sit there and say you can't make money from the markets, but it's to say be realistic against about what you're up against here. 3 pillars, in my opinion, are risk, mindset, strategy. You can have the right strategy, but if you don't have the risk principles in place, you can blow up your account and you can't be a trader anymore.
Welcome back to the Trading Battle. Today, we are joined by a true veteran of the financial markets. Our guest is Ross Maxwell, a full-time professional trader, investment manager, and award-winning mentor. He's the founder of Keyzone Traders, an educational platform built on his belief that long-term success comes from mastering risk management. Through Keyzone Traders, he offers accessible training via the Keyzone Traders Academy and supportive, engaging Discord community. With more than 20 years experience in the financial markets, Ross has seen it all, having worked in trading rooms across global hubs like London and Hong Kong. After a decade trading emerging market equity derivatives, Ross took the leap to become a full-time independent trader in 2014. For those seeking intensive guidance, he personally runs the graduate program, where he works daily with a small, selected group of traders to help them build bespoke strategies and trading plans. Get ready as we dive deep into the mindset, strategies, and risk management principles with Ross of Keyzone Traders. Hi, mate. How are you?
Hi, Jason. Very well, thank you. How are you?
I'm good. So just for people watching, I met Ross a couple of months ago at the London Prop Firm Expo. We shared a stage together, and your answers were sort of pretty much in line with what I, my philosophies of trading. So I thought it'd be really good to get you on the show.
Lovely. Yeah, thank you very much for having me, Jason. Thanks for inviting me. Yeah, it was a good event. The prop quite eye-opening for someone who was around before the prop industry sort of took over, and see how it's sort of changing the industry and the mindset of traders these days and stuff.
Yeah, interesting. And do you find that that's more of a focus for your mentees, for your students now? Are they all trying to pass these challenges?
Yeah, and I think a lot of them are, and like I say, I mean, from the expo and stuff like that, like it opened my eyes a little bit to it. And I think the way that I try and get them to approach the benefits that prop firms have is to address the issue of undercapitalization that traders have, rather than this sort of gamify trading, which isn't really trading sort of thing that some of the current sort of crop of sort of social media influence and stuff have. So I think a lot of them do come to me to try and pass these challenges and help get them to pass the challenges. But I think I try and guide them in a way that sort of like is that sort of like responsible long-term trading, and address, like I say, that undercapitalization issue, rather than just about making as much money as possible in a shorter space of time as possible.
Yeah, interesting. It does take a different approach, doesn't it, to manage these challenges? Obviously, you've got to stick to the rules. It's not just about making money. It did. I think a lot of people approach it as this is a lottery ticket. I can knock the ball out of the park here and get rich, and it's really not the right approach.
No, exactly. And it's not long term. It doesn't provide long-term sustainable income. It doesn't provide long-term sustainable success in the markets, right? I mean, and when you actually crunch the numbers, you can actually make money from prop firms without having an edge in the market. So it's like, it's sort of one of those sorts of things. It's like, what do you actually want to achieve? And, if it's like you want to become a real trader, and you want to have long-term success in the markets, then you've got to approach it in the same way. You've got to approach it like where you've got to define your edge, establish the edge, follow the processes, and build the capital that way, rather than sort of like trying to get past a challenge within 3 or 4 trades and then get as much money as you possibly can. And then it doesn't matter if you blow an account because you just go and get another challenge. It's sort of, that's not conducive to long-term success in the markets.
Yeah, absolutely true. And I think people just go into it with the wrong expectations as well. And that's why, they're rushing it, they're being greedy, and that's what these companies want, because ultimately most of them want you to fail. They just want to collect the subscriptions. So people are just playing into their hands.
Yeah, exactly. And most of them, they don't offer the education to be able to help them through passing the challenges, because, as you say, they're looking to rake the challenge, the challenge fees, rather than sort of like leverage the success of trading strategies, basically.
Yeah. Okay. So let's go over some of your history. I mean, 20
Yeah.
years in the markets, that's a heck of a lot of experience. And also, I'm right in saying that you came in from the corporate side first because you were trading emerging market derivatives.
Yeah, that's right. So I sort of when I left school, after my A levels. I didn't go to university or anything like that. But it was. I remember like my career sort of advice and career sessions and stuff like that. And it was maths was always something was a strong point. I had some friends that had gone into finance and stuff like that. So it was a natural thing to try and get into London, go get into the financial industry basically. And I started in the back office, just doing settlements, future settlements and stuff like that. But made it known that I wanted to progress effectively. So I did that quite quickly. I got what was then my FSA license, and got an opportunity on an emerging market equity derivatives desk, which was focused on Russian and South African options, and then sort of hedging the delta from the options into the futures. So yeah, my focus was on South Africa, and I got that sort of break in. So I started in 2001. I got that break in sort of 2003, something like that, and then I spent the next sort of 10, 11 years doing exactly that, trading the South African equity derivatives. So it was like futures, options. Moved to Hong Kong, which was more personal reasons than like a business decision as such. And I stuck trading sort of South African futures and options, and then came back from that in 2013, and decided that I no longer wanted to work, for someone else. I wanted to try and get a bit more flexibility, a bit more freedom to my own time, and I just wanted to sort of like try and trade for myself effectively. So that's when I took the leap in sort of 2014. And I guess the rest, as they say, is sort of history. That's sort of like went from there, and it worked. Fortunately, it worked out for me, and here I am today.
That's a pretty brave decision to leave the security, and you were obviously well established. Were you at the same bank or trading house for that whole period, or did you move around?
So I moved around a little bit, but generally it was the same desk. So the desk was transferred through a couple of firms. So I don't know if you remember Refco. That was where it started, and then they had some issues and got bought out, and came Marex, and our desk got bought by BGC. So it was the same desk, but through a few different companies and stuff like that. But majority of my time was spent at BGC. And yeah, I mean, it was a brave decision, I guess. I mean, at the time, I didn't have any it was like a calculated risk, I guess. Just that's the trader in me, like calculated risk. That's what you always look. That's the way you make every decision, right? And it was, I didn't have any responsibility at the time in terms of I didn't have any children or anything like that. So I was in my early 30s, and it was like, right, well, if I'm going to do it, then I need to do it now, because if I give it another 5-10 years and I've got children, then the pressures become different, situation looks different, and maybe you can't make that sort of thing. So I had, as you said, I was fairly well established. I had some funds behind me that I could sort of relax and sort of like take a good sort of 12 to 18 months at establishing and trying to make it work, without putting any sort of like financial pressure on myself. So it was a calculated risk, but yeah, it was a risk nonetheless, and it was a big learning curve. Trading your own money is very, very different to trading in the city for corporations, and like you say, you lose the security of a regular income as such. Like, it didn't matter what the markets did, I still got my salary at the end of the month. Whereas when you're trading for yourself, you don't have that luxury. So it was definitely a learning curve and a risk, but fortunately one that sort of like a calculated risk. I didn't put too much pressure on myself in the early stages, which I think is something that does stop a lot of traders reaching their goals, as they put too much pressure on themselves and come in with unrealistic expectations of what to achieve, and that sort of like hinders them from progressing to get to their goals, sort of thing. So it was a calculated risk, I think, is probably the best way to put it.
Yeah, I totally agree. As we said earlier, it's managing expectations. If people forget that you've got years ahead of you, not months. It really is not a rush, but you you had a very good outlook, and you paced yourself. I like that point about calculated risk, because when you are a trader, when you work in financial markets, you do find that just normal life decisions, you have this risk assessment outlook, don't you? No matter what it is, I'm looking at the pros and the cons. It might be totally unrelated to finance, but it's just the way your mind works, isn't it?
100%. Like, I have this conversation with my partner all the time, and sort of like like you say, completely unrelated. Pretty much every sort of situation you find yourself in, it's like, okay, so if I don't do this, what am I going to miss out on, and what are the consequences if I do it? And then what the alternative? And it's like, well, where's the risk to reward? Where's the biggest risk to the least, like the biggest reward to the least risk? And it is true. Obviously, you make those decisions pretty much on a sort of like consistently daily process during the week. So, and it becomes just part of your life and part of your mindset, that it just falls into every single part of your life where you're monitoring it and stuff.
Yeah, it really does. When my kids come to me and say, what should I do about this? And I'm just like rattling off the pros and cons and balancing it up. Anyway, I'm going off topic there a little bit. Okay, now look, moving from emerging market equity derivatives to what did you move to? Was it Forex?
Well, initially it was sort of more indices, more index based again. So I did when I was in the corporate, I was focused on the South African index options. So it was sort of a bit of a natural sort of switch to try and focus on indices. I didn't trade South African in the South African index. I focused on like FTSE, the DAX, sort of the S&P, Nasdaq, Dow. So like the main sort of European and US indices. I did have a little bit of exposure to sort of like the Forex market, and in through like arbitrage opportunities and stuff. But I didn't transfer. I do trade Forex now, but I didn't really initially. I tried to focus on sort of the index markets and that, because again, it was just a bit more focus on what you know, right? Focus on the things that you sort of like understand, and master that, and then see where that goes, sort of thing. So that was the plan, and that sort of like was my main focus initially.
Okay, for people watching, you've got a lot of experience now in both of the, in indices and Forex. Do you find they trade the same? Do they trade very differently? Do you have to have a different approach? What advice could you give to someone who's starting trading and looking at those markets?
Yeah, I mean, I think with the way that I approach the markets and the way that I trade, you apply the same logic and the same process and the same theory across each market, each asset class, and each time frame, etc., etc. But that's not to say that they all trade exactly the same way. It's what I try and do. And again, this sort of like transferred through. I'm going to sort of like try and give as much of a concise answer here as possible, but it's sort of like try and bring everything in. Is I had to go through a learning curve when I left the city to myself, because it was like, when you're in the city and you have access to institutional order flow, you have the volume and you have the not the direction as such, where the institutional order flow is. Whereas by leaving that, I lost that access. So my idea was to try and find a way where you can identify where that institutional order flow is, because that's effectively what moves the markets. So I developed my theory and my process around trying to identify institutional order flow through support and resistance, which I believe can be translated across all asset classes, all time frames. Like institutional footprints are there. That doesn't mean to say they trade and behave in exactly the same way. Like the FTSE is a very different beast to the DAX. The Dow is a very different beast to pretty much every index on the market, in my opinion. So they don't trade the same, but the theory and the way that I approach them is very similar. So I think the advice to beginning traders or traders starting out is focus on one or two markets and really become the master of them, and sort of like really just focus on developing the pattern recognition skills, developing the process, because you can expand out from that once you've really mastered the process first. So master the process, and you're best off doing that in highly liquid markets, because you're going to experience less, slippage, less variance. You're just going to be able to have a little bit more control. The market's going to be more liquid and therefore a little bit easier to trade. So focus on major currency crosses or major index markets, because those are the ones where you're going to be able to really develop the processes and the mindset that you need to build the foundations that if you want to expand out later, you can then do it. So I think that would be the advice is to the beginning traders is just focus on one or two first, and those highly liquid, highly traded instruments would be the most. And again, you've got the tighter spread, so the cost of trading is down. It just makes things much easier when you're starting out.
Yeah, you've identified really important factors there, especially for people coming into the market. And even if if you're used to just hearing about the FTSE on the news or something, and you've tracked it for a little bit, why not trade it? At least you're familiar with it.
Yeah, exactly. And again, if indices isn't your bag and you want to trade Forex, stick to dollar crosses, because again, the dollar, the Americans dominate the news, right? It's the Fed policy dominates the news. It's the Fed policy drives a lot of currencies, and a lot of commodities and a lot of indices. It's not just that. So try and again, it's just trying to limit the number of variables in your trading decisions when you're inexperienced to be able to understand exactly how they all manifest and make and impact the markets, right? So if you can limit the number of variables, then you're focused on achieving the results, and then you can expand on that. So yeah, focus on those it would be my advice.
Limit the variables. Yeah, that's a good message. And so it seems so far from our conversation that it's risk management, it's process, it's mindset. Are these kind of like the core? This is core to your trading, to your core trading beliefs?
100%. I actually run a course recently with Simon Campbell, who hosted the IX, the prop firm trading show. And it was the 3 pillars. And the 3 pillars, in my opinion, are risk, mindset, strategy. And it's like, risk is the first one that you need to develop, because, without the right strategy, if you have correct risk principles in place, then you can actually stay in the game long enough whilst you develop the edge and develop the strategy. But if you don't, you can have the right strategy, but if you don't have the risk principles in place, you can blow up your account and you can't be a trader anymore. So that is sort of like the most important core one. Mindset, because it's the one that is probably, in my opinion, the most difficult to establish, because it goes against a lot of human intuition. Trading, you put yourself at threat every single day in terms of like your ego and everything like that. So trying to, and it goes against a lot of societal norms. Like, we spoke earlier on about having the safety of a salary when you're employed. As a trader, you don't have that. So you have to, like, emotionally and the mindset you have to create for that, about not having that security. Also, I sit there and say, as a day trader myself, we're conditioned to think that you get, you go to work and you have to be productive to be able to be good at your job and get paid. Or actually, as a trader, sometimes you need to go to work and not do anything, and that's actually the best thing you can do. So it's like trying to condition your mind is it goes against a lot of things that you're taught as you're growing up and society teaches you. So that's sort of like pillar 2, and then the third one is the edge, because, like I say, without you can have the edge, but without the other 2, everything falls away. But you still, like, if without an edge, you can't make money in the market. So those would be my 3 pillars. So yeah, exact. Going back to the original question, I know I've sort of expanded on it quite a bit there and digressed, but it's risk, mindset, and then strategy.
Yeah, I totally agree with you. It sounds like we've done a similar journey. When I first started, I thought, right, if I can just get the technical analysis right, if I can, identify good entries, that's it. I'm going to be rich. And then you suddenly realize that is maybe 15, 20% of it. And then, then it's trade management, then it's risk management, then it's account management. And then you think, well, once I've got all that and I've got my process, easy. No, it isn't, because you get greedy, you get FOMO, you get revenge trading, overtrading. Wow, it's just such a long journey. And this is what people have to appreciate. You're not going to do this in months.
No, and exactly, and it's sort of like you learn a lot about yourself when you go on a trading journey. You find out a lot about yourself.
Night, is it?
Yeah, And you change, and that's not to sit there and say you change as a person or anything like that, but you certainly do change. You find out a lot about yourself and where your weaknesses are, and things like that. But it is a process to get there. And as you say, I mean, I don't want to sound like disrespectful or anything like that, but when somebody comes in and says like, "Oh, I'm a beginner and I want to be here in 3 to 6 months," it's a bit like, well,
Yeah.
been doing this for 20 years, and it's like it's not unfortunately it's not that easy. We're going into a professional marketplace here, where you've got up against institutions, you're up against professional traders, career traders who have got billions of pounds worth of technology behind them. And that's not to put people off and to sit there and say you can't make money from the markets, but it's to say be realistic against what you're up against here. And approach it in the right way. Like, approach it in a way as any profession would, whether it's like, I use quite a lot of analogies in my education, and one that I always sort of say is, a heart surgeon. A heart surgeon doesn't just go into the operating theatre with a scalpel and start cutting people open. He's gonna kill people. But, they have to, they go through their education, they go through their med school, they go, they probably then work on some simulated dummy environment, and then they're going in, they'll watch a professional, and then the professional will watch them before they actually get to go off and do it on themselves, sort of thing. And it's like that process probably takes, I don't know, because I've never looked into it, but I guess it probably takes a decade, or somewhere in that region. It certainly will take several years. And trading, not to say it's the same, but the mindset has to be the same. Like, you have to identify the process, you have to go through the education, you have to establish the edge, and then you need to scale. And you can't do all of those things at the same time.
Yeah, I totally agree. I use the analogy of a racing driver. So I've been driving cars for whatever it is, 40 years. I'm all right on the road. Put me on a track and I haven't got a clue. And, I've got a sports car, but I'd still be absolutely hopeless. And I probably couldn't be a respectable racing driver for another 4 or 5 years. I'd need to learn about the car, the mechanics, the tires. And with trading, it's not just about, as we said earlier, it's not just about the technical analysis or the trade management. It's the whole, it's the 3 pillars that you've already described. So do you find that people that come to you at Keyzone Traders, is this one of the first things you have to do, manage their expectations and get them real?
Yeah, I think so. And I mean, I've got a small community. I'm like, my whole messaging is about that realistic expectation and trying to manage that. So my message is not glamorous in terms of like when people try to like approach me about my education. I sort of like I say from the outset, like, this is my approach. Okay, so and that way I find that when they come onto my courses, or they come to me, they know what my messaging is. They know that I'm not going to be this one that sort of sits there and says like, okay, this time next year, Rodney, that sort of stuff. Like, if you're a UK only Force and Horses fan, you'll know what I mean. But I find that the people that sign up to my courses have already understood my messaging. So I find that they're generally easier to work with because they're open to my theory and the way that I sort of work. But just a quick going back on a bit, I'm talking about the analogies and stuff, and I think this is another thing that a lot of traders struggle with, especially coming into the markets, and it is to do with expectations a little bit. But one that I use, again, it's around a sports analogy and professional football stuff. I find that a lot of people think that all you have to do to become a successful trader is come and trade the markets and, identify your entries, stops, targets, manage your risk. And then it's like, well, actually, no, like that is what I call your game time. Like, you still have this whole process around actual execution and looking at charts. Like, you need to create and analyze your trade plan. You need to journal and analyze your trading journal and performance. I'm a big advocate for like mindfulness, meditation, getting yourself in the right state of mind to be able to sit, to be in, to perform at your peak when you sit down in those key moments. And it's like, I always like a professional footballer, professional rugby player, any sort of elite athlete in whatsoever. I guess the perfect one would be a 100-meter sprinter, in the sense that they look at nutrition, they look at tactics, they look at their running technique, their training, their recovery, all like their everything that they're going into for a 10-second race. And it's like, you still have to do all this work around your execution and your actual time at the screen, because it's all of that extra work around it that puts you in the best position when you go to the screen, that your edge is established, your risk management is on point, your performance, your mindset, everything is best at best to give you the best chance of succeeding when you're sat at the screen. And it's like, yeah, it's just, again, it's not just sitting down at charts and executing trades. There's a bigger picture to it.
Yeah, I really like that comparison, that analogy, actually, because people that I've spoken to recently, successful people, young people, actually, they are focused on 1 or 2 trades a day. So I like that comparison to a sprinter who might, who's only running for 10 or 15 seconds. Their whole day is centered around that 1 or 2 trades.
Exactly.
Then, like you said earlier, it's not about doing 8 to 10 hours a day in front of a screen. That's not necessarily the key to success.
No, exactly. I mean, I've had this conversation so many times through my years as a coach, where somebody will sit there and say, I just don't have time to journal my trades. Like, I've got, I've done 15, 20 trades today. It's like, okay, but you're doing 15, 20 trades a day and you're not profitable. So, like, how are you working out how you need to refine your edge to make yourself profitable if you're not having the time to journal? Actually, your time is going to be better spent taking 5 to 10 trades a day, journaling those 5 to 10 trades a day, and then spending the time analyzing that to refine your edge, not just sat at the screen. Because it's that, what's the saying, the definition of insanity is doing the same thing over and over again and expecting a different result. If you're sitting there trading, overtrading, losing money, you need to change something, because if you carry on doing it, you're just going to carry on losing money. So, it's trying to get people to understand that actually all that less glamorous stuff, all the stuff that doesn't give you the adrenaline rush and the dopamine hits and stuff like that, all the less glamorous stuff is the most important thing at that time to get you to where you want to be. So,
yeah, so true. And I'm sure you'll agree, the guys that are doing the 15 to 20 trades a day, if they're honest with themselves, they're not really in it for the trading, they're really for the entertainment. Right. They're getting, as you say, the dopamine hit, and they're not really they don't really have a structure towards longevity in the business.
No, and do you know what? I would sort of take a step back from it and sort of sit there and say there is an argument that there are some people that are happy to almost treat trading as a hobby. They're not looking to make it a full-time income, and they want to just come and dabble in markets and sort of like have a little go, and sort of get that sort of like dopamine hit and such. But they still need, in my opinion, to do it in an appropriate and responsible way. They still need to understand their risk management. They still need to have some form of strategy, because otherwise they are going to lose a lot of money.
And
that's what we don't want to see. Certainly, as coaches and educators, I guess that's my sort of what I feel is not a moral obligation. I think that's a little bit sort of like high, getting over preachy, but it's sort of like trying to get people to understand that even if that is your sort of goal from trading, is to just provide like a little bit of a supplementary income, or just sort of get involved in the markets and understand them a little bit more. At least do it from a place where you're educated on the risks and understand the risks, and you manage the risks in front of you, so that you don't do some serious damage to your finances.
Yeah, again, another important message, because people lie to themselves. They'll say, yeah, I'm a trader, but I say, well, hang on, are you really a trader? Because if you're doing that, you're actually a gambler. Nothing wrong with being a gambler, but if you can afford to blow 500 quid a month on having fun gambling, all right, do that, but be honest with yourself and say, okay, that's my gambling money. If I turn it into £1,000, brilliant. If I blow the 500, all right. But then if you actually want to be in this game and in 12 months' time, maybe made 10 or 20%, then you need a different approach. Okay, sorry.
I was just going to say, and the problem is that I always sit there and say, like, as a gambler, if you want to gamble, like a casino or that is a much safer place than the financial markets, because the financial market, you can walk into a casino with 500 quid and all you're going to lose is 500 quid. You walk into the financial markets and you can lose more than, like, it's, so, and you can lose it a lot quicker than you can in a casino. So it's like, if you're going to do it, like going into the fee, it's like gamble responsibly, right? Like, the financial markets are a completely different beast, and you really need to understand the risks involved before you tackle them.
Yeah, this yet another good point. When you go into a casino, it's all structured. You know when the game starts. You know exactly how much you bet. You know exactly how much you can lose, how much you can win, and then the game ends. It's structured to stop you destroy yourself in seconds. And the financial markets are not. In fact, if anything, they're structured for you to blow everything in the shortest amount of time possible if you don't know what you're doing.
Yeah, exactly. You've got no Donald Trump tweets in the middle of the game to try and throw things around either, have you? It's like
exactly right.
Any other variable.
Yeah, that's a really good point. Okay, so let's say it's day one. I'm a new Keyzone Traders subscriber. I've signed up. What can I expect over the days and weeks ahead?
Okay, so the first sort of thing is you get access to my my learning center, which again I try and I do structure my course in a way that you go through that process of like understanding foundations, risk, mindset, understand the way the markets move, and then you get the strategy. So you work your way through that. You have a small supportive community. I've been part of big communities before, and I find they just go off topic a little bit, and you get like a bit of overload of information, especially for new people. People talking about various strategies and things. So I try and keep it small. It allows me to be a bit more personable as well. It allows me to respond to people personally. You work through the course. Then you have a coaching call with myself where we sort of sit down, answer any questions, and just try and establish that first trading plan, really. Because your first trading plan's never your last trading plan, but establish that first trading plan. And go from there, really. And then just through the journey, you have that supportive community. You have access to me through the Discord channel. I give out watch lists, I give out analysis, I do live trading, I do monthly webinars with my community as well, again, just to keep that learning going and answer any questions. And also, over the years, my course develops, my material develops, my ideas develop. So it's also about trying to keep the community updated with any new ideas or new information or adjustments that I make to my plan and stuff like that. And then just try and, like I say, hopefully grow together. So, that's sort of the journey from a point of view with Academy traders, certainly.
Okay. Yeah, I would imagine the community is quite valuable because it's so lonely being a trader, and it's so difficult to communicate with like-minded people. And I don't care who you are. Even me, after 40 years, I still struggle. I don't find it. I don't just wake up every morning and money comes flowing into my account. So it is lonely. It is a struggle. And if you've got other people to interact with, and even for just that reassurance, oh, you're also struggling with that. I guess that's really, really helpful to people, is it?
Yeah, 100%. I think and I'll be honest, I think there's so much education out there now these days as well. And like you can get a lot of information on YouTube. I think the community is probably more valuable than the actual education itself in some ways, because like you say, it is a very lonely job. It is just you and the computer screen, like that is generally it. And just being able to sort of rationalize things when you're going through a tough period, or when when you're questioning or doubting yourself or something, like having a community that can sort of like say, yeah, you know what, I took that trade as well, and it was just a losing trade. It wasn't anything you did wrong. I think that's really important. I think the community, being part of a community is key in terms of long-term success as well as a trader. Is just to have that sort of rational team around you, I guess.
Yeah, I think that's really true, and it reminds me that I'm baffled about how many people sort of come to me and they want to start trading, and I talk to them, and I can do this for you and I can do that for you. Then I never hear from them again. Okay, maybe they sign up to Keyzone Traders. I don't know, but it seems to me that so many people just think, no, I don't want to spend the money on a course, and then they'll open a trading account and probably blow twice what they would have spent on a course or at Keyzone Traders. And it's just like, I just don't understand why they think that trading isn't something that they need education for.
No, I totally agree, and I'm not too sure. I think that again comes down to a bit of mindset thing, and I do think also. I mean, if having spoken to you and met you before, Jason, I know you've got a very similar sort of like mindset and approach to trading that I have in terms of like the realistic approach. And unfortunately, I think sometimes the dream still sells better than the reality. So like if you give the reality of what it looks, it's like, it's not what I'm looking for. It's like, well, okay, and actually sometimes I have it where people come back to me like a year, 18 months down the line, and like, oh yeah, actually you were right. Now I'm ready to. It's almost like you have to experience that the pain to be able to come back and go, actually, well, I'm still gonna approach this. But coaching as well. I've really gained a lot from it in terms of helping other traders overcome issues that I maybe didn't have, and then you learn a little bit more about other people, so that you can then pass that knowledge on to someone else that has had it. And I think just that coaching has really helped me grow as a person and as a coach as well. Because I think it's in fact, just as you say, you're always learning in the markets. I
completely agree with that.
Yeah, the markets evolve, problems evolve, the strategies evolve. It's really been a really positive sort of experience from me in terms of my personal growth as well.
Yeah, I would completely agree with that. I didn't realize how much I didn't know until I started teaching people. And and I love that challenge of when they say they've got a problem, and I think, okay, I've got to try and figure that one out. And I love that challenge of figuring out a solution for them. And I've met really nice, a lot of people that I've met from coaching have become friends as well. So it's all around benefit. It frustrates me when people say, well, why are you teaching if you're such a great trader? You're obviously a multi-millionaire, and it's such a naive point of view.
Yeah, and I think there's a few answers that I come back with on that sort of side of things when people sit there and say that as well. Is like, one, as a trader, it's like everyone presumes just because you're a professional trader, you must be flying around in private jets and living in penthouses and stuff. It's like, do the maths on terms of how much capital you have to have behind you, trade responsibly to be able to make the sort of money that establishes that lifestyle. And it's like, you don't need to have that lifestyle to be a successful professional trader. Like, if you can be a successful professional trader and make a really good living, not one that's going to sustain a lifestyle of like, owning your own private jet and all of that sort of business. It's like, I get to pick my kids up from school. I get to drop them off. I get to spend the whole summer with them because I can trade from anywhere and stuff like that. It's like, actually the time freedom is so much more. That doesn't mean to say that, such and such who is making £5 million is not a better trader than myself or anything like that, 5 million a year or whatever. It's not, but equally your skill sets as a trading coach are very different to being a successful trader.
True.
Not every successful trader is going to be able to teach you to become a successful trader yourself. So they're very different mindsets and very different skill sets as well. And I do find that the trading coaches and mentors that I've come across have a very different mindset and the way that they approach the markets and the way that they approach other people who trade as well. Yeah,
I think that's a good point. So we need to wrap it up quite soon, but you said that most people that sign up to Keyzone Traders, they already know who you are, they already know your core beliefs, they know what they're signing up for. Is that because you're out there on social media?
I'll be honest with you. I'm not of the generation that sort of grew up with social media, so I'm not social media sort of savvy. It's more through. I mean, I have a presence on social media on Instagram. I have a social media presence on LinkedIn and Facebook. But it's more just sort of like the networking at the events that I've seen you at, and then sort of like through word of mouth in terms of traders that I've worked with and stuff like that. That's where people generally sort of like find me from. That's the sort of route that people generally coming to me from.
Cool. Yeah, it's a good way. It's a good way to get yourself out there through those kind of events. Well, look, I would say to people that are watching, if you are getting into trading, you are so lucky, because nowadays there are people like Ross out there with tremendous experience, and they're willing to give up their time to teach you. I didn't have that. When I started in the 80s and 90s, the only people that I could learn from were the guys that were trading in the pit, and they're not going to have me standing in the pit going, oh, this is why I'm buying fives and why I'm selling sevens. It just didn't exist. There was only one way to learn. And if you don't take advantage of this now, with so many great mentors out there, I think it's really foolish, because it is literally the only shortcut to success is getting someone like yourself to train them.
Yeah, exactly. And it's just learning from mistakes, isn't it? Try and pass on that knowledge. And again, that's sort of like one of the things that I enjoy about the coaching and mentoring side is being able to, identify where things and almost sit there and say, you know what, it's okay. I made the same mistake. And whenever the other thing that I always like to do with my community as well is like tell them when I've made a mistake. Because if you tell them when I've made a mistake in my process, it makes them realize that actually when they make a mistake in their process, it is part and parcel of trading. And again, it's one of those things. It's being able to identify. And the thing. Sorry, I'm digressing again a little bit here, but it's like when you make a mistake in your process, you need to focus on that, and you need to see how can I stop that happening again, rather than beating yourself up about it. What process can I put in place to stop making that mistake again? Sometimes it's not possible, but at least try and look at it and try and change it, because then you become a better trader for it. So
it's the only way to be a better trader. Yeah. Ross, that was great. Thank you so much. Really interesting. Good chat. We could have chatted for a lot longer, I'm sure, but
sure. Yeah. Really well. Yeah. Thank you very much for having me, Jason. Really appreciate it. And loved every minute. So thank you very much for having us.
Thanks so much. Ross hammered home that survival dictates success, and mastering risk management is non-negotiable. Forget predicting the market. Focus on controlling your risk per trade. We learned that complex strategies kill consistency. You need a simple, bespoke plan that truly fits your psychology to reveal your trading edge. For everyone looking to learn from Ross and explore the Keyzone Traders Academy or his graduate program, please check out the links in the show notes and find him on his socials. Ross, thank you for sharing your 2 decades of experience and wisdom with the Trading Battle audience today. As we wrap up, my single biggest takeaway is this: the trader's greatest asset is not their technical knowledge, but their psychological discipline, built around an unwavering focus on risk control. Thank you for joining me. This is your host, Jason Sen, and I'll catch you later. Thanks, mate. That was really good.
No worries. Thank you very much, Jason. Yeah, appreciate it. It was enjoyed that.